Good afternoon, everybody. This is Joe Cusick from the Cusick Group, securities provided by MoneyBlock, with your Tech Talk here from MarketStream.live. This is where we're going to go through and take a look at some of the technical components in the market. For those of you that are tech enthusiasts, this would be a great opportunity to hear a discussion about what's going on in the market, kind of swap some notes. For those of you that are new to technical analysis and utilizing it in your trading strategy, this is an opportunity for you to learn a new skill and see how you can come back every day and see how you can use this to help your trading and investing. I'm taking a look at the markets right now and the uncertainty that continues to surround the markets with all the major averages, the S&Ps, the NASDAQ, and the Dow Jones. They're slightly in the red right now. They're trying to get above that green level, but we're going to watch that very closely into the close. But we still have mixed action as it pertains to reactions to the current earnings cycle. Now, granted, most people are going to throw out the political headlines that are continuing to surface about Clinton and her emails and also Mr. Trump. That gets the markets in a jittery range, but we've seen that jittery range basically for the last month and a half. And we still have plenty of earnings results going into November. So we want to make sure that we're focused on the earnings results right now. We'll let November 8th determine the political ramifications of all of the headlines that we're seeing right now. You know what? That means that you go out, you got to hit the voting box if you actually want to make a difference. So when you look at the major moving averages and from a technical perspective, because we have all this fundamental information, what do we really want to look at? I keep it simple. Take a look at the 50-day moving averages. This is where we're going to be able to see where the weakness or strength is in the midterm for the major indices as well as any stock that you want to put in there. And right now, when you take a look at some of the major moving averages and specifically taking a look at the Dow Jones, and you can type in the ETF DIA, that's the ETF that tracks the Dow Jones 30, you could see that, first of all, it's below its 50-day moving average. It's just below there right now. I'm looking at the chart as we're speaking. Now, we could have some resolution here very soon with a move either breaking through that 50-day moving average, which then will make the 50-day support level rather than resistance, or it never really gets up there and touches it, and then we just start to pull back. At this juncture right now, since it's down below that 50-day moving average, there is that jittery negative sentiment that's starting to build. But you want to look at this and just take a little bit of a grain of salt with that statement, only because if things start to get negative, these blue chips could see a flight to safety bid, as may small caps, especially if we start to see the large cap tech and other large cap oil names or commodity names start to come under pressure, as well as also some large cap consumer discretionary names. Taking a look at the spiders, which track the S&P 500, I'm going to look at the 60-minute chart. So if you go in and you take a look at your 60-minute charts, you could see that basically for the last week or so, we have been stuck in this range for the spiders and on the S&P 500. But on the spiders between 215 on the upside and 211. Now, right now, we need to see some conviction if we're going to be able to start taking a stance on whether we're bullish or bearish on the S&P 500. Specifically, I need to see some conviction going through 215 to 216, or in other words, that 50-day moving average on the spiders. That will spark potentially a new leg to the upside, and we want to keep an eye on that. We want to see a challenge of the October highs. Now, if we see sellers come in, and I'm actually taking a look at this right now, if we continue to see sellers come in, watch that 211 mark, that 212 mark on these spiders. That's going to be a critical level to hold. For you futures traders, that's right around that 2105 level on the S&P, looking at the E-mini Dece expiration. That's going to be a very critical level. Overall, what we're seeing here is pretty equal balance as far as advanced decliners, And we're not really seeing a lot of volume or conviction at this juncture. So we're stuck in this range right now. And we do, like I said, have some considerable amount of earnings still left on the docket going into November. And so we do have some catalysts still, as well as the elections. And we still have the Fed meeting on Wednesday, which there isn't an expectation of any rate decision that's going to be, except for the fact that it's highly probable they'll leave them unchanged. As a matter of fact, historically, raising or lowering rates without having a press conference is pretty much so unprecedented in this day and age now that they offer the press conference. And there is no press conference after this particular meeting, so we'll have to wait and see. Until then, like I said, use that 50-day moving average. That's midterm support or resistance. Right now, we're seeing that it's established in resistance in a major index like the Dow Jones as well as the S&P 500. We want to keep an eye on that. If we're going to get a catalyst to the upside, we need to break through that resistance level, that 50-day MA. All right, that's Tech Talk now. We're going to do the closing bell at 4:30 Eastern Time. This is Joe Cusick from the Cusick Group, securities provided by MoneyBlock, with your tech report. And from MarketStream Live, we'll be back at 4:30 Eastern Time, closing bell. We'll see you there. Take care and have a great rest of the trading day.